Hold on tight, because what I'm about to reveal about the Las Vegas housing market in late 2025 will make your jaw drop and could completely rewrite your financial future if you own property here or you're even thinking about buying in Sin City. The numbers are screaming red alerts that nobody in power wants to talk about. And by the time you finish watching this, you'll see exactly why the so-called experts are quietly panicking behind closed doors. Before we dive into the chaos that's unfolding right now across the valley, do me a quick favor. Smash that subscribe button and turn on notifications so you never miss an update on markets that can make or break your wealth. And drop a comment below telling me if you're a homeowner here, a potential buyer, or just watching the fireworks from afar because your input fuels videos like this. All right, let's rip the Band-Aid off. The Las Vegas real estate scene is sliding into a dangerous freeze that feels eerily familiar, but with brand new twists that could hit harder than anyone expects. Starting with the fact that even though the average home value still sits around $436,000 after creeping up a measly 2.7% over the past year, dig just one layer deeper and the picture turns brutal because inventory has exploded by nearly 37% while actual sales have nosedived, leaving houses rotting on the market for weeks longer than anyone is used to. And with mortgage rates glued around 7%, both sellers and buyers are locked in a standoff that's paralyzing everything. Nevada can't catch a break on jobs either, holding the shameful title of highest unemployment in the country at 5.7% month after month since the pandemic mess, and the latest figures show Las Vegas actually lost 2,600 jobs just from October to November alone, with employers slashing headcounts for half a year straight, creating a vicious cycle where people can't afford their mortgages because paychecks are shrinking or disappearing altogether. Now, brace yourself for the part that keeps me up at night. Foreclosure notices are surging like a tidal wave building offshore, jumping 28% year over year across the valley, and since January 2022, over 5,400 homeowners have already been slapped with default papers, with a full quarter of those hitting in the first 6 months of this year alone, meaning the distress is accelerating faster than anyone wants to admit, and the hardest hit neighborhoods are East Las Vegas, Southwest Side, North Las Vegas, Paradise, Sunrise Manor, all the way out to Kyle Canyon and Centennial Hills. These are the working class areas where lower incomes meet higher poverty rates. And Nevada topped the entire nation in foreclosure filings this summer with one notice for every 2,326 homes, putting Las Vegas third among big metro areas for lender seizures on nearly 500 properties in a single month. Tourism, the lifeblood of this town, is coughing up blood too. The Convention and Visitors Authority admitted almost 400,000 fewer visitors showed up in June compared to last year, an 11% plunge they blame on economic uncertainty that's gutting service jobs from the Strip to the suburbs. And when tourists stop flowing, tips dry up, hours get cut, and suddenly that mortgage payment looks impossible for thousands of families who built their budgets around busy seasons that just aren't materializing anymore. Peel back the shiny headlines and the sales data hits like a sucker punch. October 2025 saw inventory balloon 31% compared to last year, while the median single-family price dipped to around $470,000, down 2% year over year, and homes are now lingering 55 to 63 days on market compared to the blink-and-you-miss-it sales we saw just a couple years back, a complete reversal from early in the year when listings flew off in 44 days flat. Affordability has hit a brick wall for regular locals because even with prices softening a bit, 7% interest rates mean your monthly payment on a median home is practically double what someone locked in at 3% back in 2020 is paying, and many folks who were barely hanging on thanks to pandemic-era relief programs just watched those lifelines vanish overnight with policy changes in Washington, leaving them exposed and sinking fast. Cash is king right now, with 23% of deals closing all cash, mostly to out-of-state investors, hedge funds, and big institutions that have scooped up over 131,000 homes since the year 2000 and now control roughly a quarter of all transactions, pricing young families completely out of the game, while those same investors park properties as rentals with sky-high leases that locals can't touch on service industry wages. New construction looked like a bright spot for a minute, with building permits up 23% year to date. But if demand keeps evaporating, all those fresh units will just flood an already oversupplied market and drag prices down further, especially since rental vacancy isn't budging
and institutional owners have zero incentive to sell when they can milk rents forever. Everyone keeps chanting, "This isn't 2008," like a mantra. And sure, we're not seeing 6,000 defaults a month yet, but the trajectory is ugly. Wells Fargo economists warn mortgage rates won't dip below 6% anytime soon, and could settle around 3.75% Fed funds rate, which is still miles above pre-pandemic levels, keeping the market in deep freeze, while Clark County's population growth slows and job losses mount, risking an actual exodus if things don't turn around fast. Luxury homes over $1 million are the one pocket still buzzing, thanks to international buyers and wealthy relocators fleeing high-tax states, but that does absolutely nothing for the average family getting crushed under insurance premiums that keep climbing, lending standards that feel like Fort Knox, and consumer confidence that's crashed harder than a bad night at the tables, thanks to trade worries and endless headlines about slowdowns. Commercial real estate collapsing at the same time isn't helping. Empty office towers and failing retail centers kill even more jobs, feeding right back into residential weakness in a feedback loop that's downright scary. Spring usually brings a flood of new listings, 20 to 30% more inventory, but this year the pipeline looks thin compared to pre-pandemic norms while demand wilts, setting up a perfect storm where prices in foreclosure-heavy neighborhoods tank first, dragging nearby values down, pushing more owners underwater and tempting strategic defaults that snowball the whole mess. If you bought before 2022 and locked in a low rate, you're probably sitting pretty for now, as long as life doesn't force you to sell. But anyone needing to move, job transfer, growing family, whatever, could take a serious bath because buyers with financing are rare birds these days. For potential buyers watching this, I know it feels like waiting for the dip could pay off huge, but timing markets is a gamble even Vegas pros lose. And with rates stubborn and foreclosures rising, snapping up a deal might mean catching a falling knife if unemployment keeps climbing and tourism doesn't rebound soon. The bottom line is, Las Vegas real estate is flashing every warning light imaginable. Record unemployment, surging defaults, tourist traffic evaporating, interest rates choking demand, investors squeezing out regular families, and a safety net that's been yanked away. And ignoring these signals is playing Russian roulette with your biggest asset. Dramatic action would need to come from policymakers, employers, and maybe even the Fed dropping rates faster than projected. But until that happens, the smart move is eyes wide open, cash cushions ready, and plans flexible. Because what unfolds in the next 6 to 12 months could either be a historic buying opportunity or a devastating correction that wipes out equity for thousands who thought the party would never end. If this video lit a fire under you or saved you from a bad move, hammer that like button, share with every friend or family member tied to Vegas real estate, subscribe for weekly deep dives into markets that matter, and comment right now. Are you holding, selling, buying, or just watching the chaos unfold? Your stories keep this channel growing, and I'll see you in the next one where we track whether this freeze turns into a full-blown crash or somehow thaws out before it's too late. Stay sharp out there.